Hi there, you're at the Bitcoin Wyckoff analysis session. So we'll look at both weekly and daily time frames and see where Bitcoin is at the moment and why. In the title I said while the price seems to be stalling, but it's probably not going to last for too long. So let's quickly take a look. Here we're looking at the weekly chart of Bitcoin, and if you're new to this session, the rainbow colors are the key levels. Not that there aren't any intermediate levels between these, just that they are having more reference points or key stages in terms of Wyckoff. So that's why I have those key levels over there. Between the key levels there are intermediate levels that we'll always see where the prices get support or got restrained or rejected. So in terms of Wyckoff stages, we have two hypotheses here. One is the blue scenario, the other is the yellow. The blue scenario is where the buying climax happened back in March last year, and then the upthrust November, December last year, and eventually upthrust of the distribution during mid-July. The yellow scenario is one stage later. Basically, this entire period on the left over here was a PSY period, considered PSY period, and then the buying climax happened end of the year last year, and then obviously the automatic reaction and upthrust right now that we are going through over the past 5 weeks. So why I say that this price stagnation is not going to stay like this for very long, because if we look at these two channels, the pink and the light blue, so these two upward channels, one is the macro trend, and the light blue is like the micro trend within the this macro. But when I say micro, because this is a weekly time frame, so it's not that micro. So if we go to the daily or even shorter time frames, those are the actual micro or nano, pickle, whatever you want to name them using the those terms. So going back to this, the price currently still is within both upward channels, but the light blue one, with your sharp eyes, you probably have already noticed that it's getting towards the lower boundary of this upward channel. So either this week, only a little bit less than 2 days left, or next week, there has to be some sort of movement to signal where the price is going or is heading. So the whales have to signal some sort of price actions to tell or to fake some people that we're going or heading one way, because next week's candle will start right over there, meaning it's already at the edge. So if it ends up as a cross, meaning the bulls and bears consider this price level at around 119K is where they're comfortable with right now. First scenario is that the price will stay along this bottom edge and edge up. That's scenario 1. Scenario 2 is that it bounces or it boosts, surge fiercely and challenge the top edge of the pink box, because that's the ceiling of the macro upward trend or upward trend simply. So that's scenario 2, positive scenarios for the bulls. But then for bears, because it's at the edge of the upward channel, there is a chance that it comes down to test the purple. That purple key level is set by these peaks over here. So may it be the yellow scenario or the blue scenario. The purple over there at 104K is the first key level to be tested before the bottom edge of the pink is going to be tested. So if the price finds or the market finds sufficient demand, obviously it can rebound and continue to get to this upwards of the distribution in the yellow scenario. However, if there's no more demand, then what would happen is the blue scenario may be the final case, because what would happen then is even if the price finds support at the purple and rebounds and doesn't go above or to the level of the upwards of the distribution in the blue scenario, it still works for the yellow. I'll explain in a minute. Then it may eventually edge along this pink upward channel and dies down eventually. So that's the first scenario for the bears. That's good for the bears. And I just mentioned about this yellow scenario may still work because upwards of the distribution does not necessarily happen every single distribution cycle, likewise for upwards, but then it has already happened here, even in the yellow scenario. So if it doesn't happen, I mean the upwards of the distribution, that means from the upwards over here, the price comes down, even if there's rebound, that's also an LPS by the last point of supply. So whether it's upwards or upwards of the distribution, it doesn't matter about the naming. Basically, there's no more demand for Bitcoin at that stage when the price eventually comes out of the upward channel. So those are the two scenarios for blue and bears. And there's one more thing. While coming down may signal like a weak demand. However, if this is really the yellow scenario, if there's new elements or new news coming out that's good for Bitcoin, there is a chance that even if it keeps coming down all the way into early 2026, this level, this light blue key level 74K, is actually where the automatic reaction here, the yellow AR was. It happened back in mid-March. So that, if that happens, that would be a sign of weakness over here. So it can be the blue sign of weakness as well, just that it's a phase D if you go back to check the Wyckoff textbook definition. But it doesn't matter. Basically, the demand is quite weak, and that's why we have this sign of weakness. And whether it's the blue scenario or yellow scenario, that will happen over there. Just that if it is the blue, then it may continue with the more LPS-wise and eventually go back to accumulation. So while for the yellow, if it really comes down, but some very fantastic news come out for Bitcoin, then even if it falls all the way to 74K, it can still return and challenge the upwards of the distribution level. So that's the tricky part about the current situation of Bitcoin. So while the demand seems to be waning, I won't say waning, because if we look at the candlestick last week, there was quite a bit of buying pushing it upwards from the bottom edge of the upward channel. So somebody wants to keep the price within this range. So this very narrow range that I'm talking about. So even though there were two times, mid-July as well as this week, that there were some significant selling over here, and it never goes above this level, it seems that the bulls are still able to defend this level. but this is very tricky, a very tricky scenario because of these two, especially these two long wicks over here. While we've got similar patterns back in the earlier peaks during either alphas or the yellow scenario buying climax, it's getting trickier and trickier because it may be the last bit of FOMO coming in, pushing the price up. Because if we look at the volume bars here, they aren't as high as what happened back in this peak, as well as the earlier one back in February last year. So looking at these volume bars, they were much higher, like more than double of what we have right now. So be really, really careful, even if the price really surge. So that's the macro view on the weekly time frame. And going to the daily, last week we put in these tags, so I've updated this to AR2 just not to not to confuse you about this, because in the Wyckoff textbook definition, it doesn't call this an AR after upthrust. It basically have an AR after buying climax, and that's it. But the patterns would exhibit, or the trading activities of people would trigger the charts to exhibit this kind of behavior. So to make it easier for you to understand and not to confuse you at the same time, I named this AR2, so you know is something similar to the automatic reaction, but is something for the upthrust and upthrust after distribution. But for upthrust after distribution, it doesn't matter. So even if I don't put AR, we know that after upthrust after distribution, the price is likely to come down even if it's rebound. So here, the question marks we put in last week. So we ask, after this upthrust, would there be a second test to similar level? And the price actually went to where, or similar level as the upthrust, closing is a funny, right? So if we look at the close of these candles, it closes right at where the wick peaked. So I will still keep it as a second test instead of an upthrust of the distribution, because there's a chance that we'll see that coming if the weekly is going to rebound and go straight up to test this pink ceiling. So here it's coming down for a sign of weakness, but it's still a bit early. In the daily time frame, there are still like 3-4 days, and maybe max 5 days till Thursday, that it's going to get outside of this upward channel. So this is the same upward channel box we see in the weekly chart. This light blue box is exactly the same. So that's why when I say in the beginning, it's either this week, remaining 2 days, or early mid next week. That's why we've got 5 to 6 days left over here, that a decision has to be made, a signal has to be provided to the market where the price is going to head to. So I'm not going to repeat like the edging up of the price or like falling outside, because we've already covered it. So what would happen after this is, I already touched on this earlier, there may be a chance that the price rebound and challenge the ceiling for the upthrust after distribution. So I just want to add this pink box into the daily interval, so we can see definitely where it's heading. So there are 2 resistance levels for this, even though that the price is at all-time high. The 2 ceilings, one over here and the other over here, are resistance for the potential all-time high if an upthrust after distribution happens. So this over here is a moving resistance. It's a bit tricky. Right now it's at around 136k, but if we go further along the timeline to November, it moves up to about mid 140k. If it stays within the pink. If it goes outside, which is much more difficult because it has been set by multiple references over here, the previous peaks. So if it goes outside and goes straight to test this, it's much less likely scenario, maybe 10 to 20%. This one is like maybe 40-50%, while falling outside is the remaining like probability. So even if it edges out, this wedge over here is going to squeeze the price to make a decision. So an upward wedge in candlestick analysis is a bearish sign, so it may well go like comes back to test the center part or the center line of the pink box, or go test the bottom edge over here. So if it edges along, that means around late October, early November time, that will eventually happen. So that's where, even if we have an upward self-distribution, by end of October, early November, that may likely take a U-turn and show some LPSYs and eventually contest this bottom edge of the upward channel, the macro one. So I think that's pretty much it for Bitcoin for now. While it's trading sideways, we'll see some movements pretty soon. I just quickly want to check this Bollinger Band and Kona squeeze indicator. So a squeeze previously happened back in late July, and we have a price decline and eventually it bounced again. Now that we may be seeing another squeeze coming if the price continue to stay within this narrow range of trading, because the upper boundary has already merged together, the orange and the purple. The bottom part, the purple is flat, so if any kind of horizontal trading happens in the next few days, this purple will come inside the orange, and that will trigger a squeeze, and that's when the price move will happen, either to the upside or downside. So be prepared for what's coming in the next few days. So likely before our next session, bigger